Good morning, everyone, and happy Monday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back and thank you all so much for being here. I hope you had a fantastic weekend. I was actually able to leave the house for the first time for a lunch date, so it was really exciting to get out of the house, and I have my post-op meeting with my surgeon today, so I'm excited to see how that all goes. Now, of course, this morning we'll be taking a look at exciting stock market news, notable earnings reports, and which stocks are the morning's biggest gainers and losers. Don't forget to share this video with your other market-minded friends, and make sure you've downloaded the TipRanks mobile app by following the link in the description down below. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning after stronger than expected job reports on Fridays caused investors to be worried that the Federal Reserve would not stop raising interest rates. Right now, Dow futures are down 0.58%, S&P 500 futures down 0.77%, and Nasdaq futures down 0.98%. Shares of Tesla are up slightly this morning after the company announced they'd be increasing prices on their Model Y. The new vehicles will receive a tax credit from the government. The performance version of the Model Y started out this year at about $70,000, then they dramatically cut prices back on January 12th to about $57,000, but at the time that still wasn't low enough to qualify for the government's tax credit. But the government has now made changes where the Model Y will be classified as an SUV versus a car, so it now fits underneath that tax credit limit. The Model Y has now been increased about $1,000 to around $58,000. The consensus among analysts come in at a moderate buy with an average upside of nearly 1%, while more recent ratings have upside of over 15%. In the latest round of tech layoffs, we have Dell Technologies, who plans on cutting about 5% of its global workforce. That will be about 6,650 jobs. The company said that they are taking these prudent steps in light of a challenging global economic environment. The layoffs were announced to their employees today on Monday. Analysts currently rate the Dell stock a strong buy with an average upside of 21%. Public Storage has made an unsolicited offer to buy Life Storage for $11 billion in an all-stock deal. The president and CEO of Public Storage said that we have been disappointed that Life Storage's board has refused to engage constructively with us. Life Storage explicitly wrote back in December that Life Storage is not for sale. They reaffirmed that stance on January 31st without offering any avenue for further dialogue and has been unresponsive to our outreach. Public Storage is offering about $129 per share, representing about a 17% premium to their closing price on Friday. Analysts currently rate the Public Storage stock a moderate buy with an average upside of nearly 5%. And shares of Catalent are soaring this morning, currently up nearly 29% on reports that life sciences company Danaher has expressed interest in taking them over. Catalent is a contract manufacturer for pharmaceutical firms, and they formed partnerships with companies like Moderna, AstraZeneca, and Johnson & Johnson over the COVID-19 situation. In a report from Bloomberg, it says that it is unclear whether Catalent is receptive to an offer, clarifying that the deal wasn't imminent. We've still yet to receive comment from either company. The Catalent stock is currently rated a moderate buy with an average price target of $70, which it has since surpassed this morning. Now, moving over to notable earnings reports. We have another fairly busy week ahead of us for earnings, with some big names reporting. In the after hours today, we'll be kicking it off with Pinterest, Activision Blizzard, Take-Two Interactive, and Spirit Airlines. And later in the week, we'll be hearing from Walt Disney, CVS Health, Uber Technologies, AbbVie, Expedia, and PayPal, to just name a few. In the pre-market this morning, so far we've heard from Tyson Foods. Their stock is dropping after the company saw their profits tumble, missing on both earnings and revenue estimates. For their Q1, they reported earnings per share of 85 cents. That fell short by 52 cents per share and had dropped 70% year over year. Their revenue came in at $13.26 billion, which fell short by $250 million. The company did reaffirm their outlook for 2023. Their stock is currently rated a hold with an average upside of over 9%. And we've also heard from Energizer. Their stock is also down after missing on earnings and revenue. Their Q1 earnings per share came in at 72 cents, missing by just 4 cents per share. Meanwhile, their revenue of $765 million fell over 9% year over year and missed by $20.85 million. Analysts currently rate the Energizer stock a moderate buy with a slight upside of 2%. Now let's take a look at which stocks are the morning's biggest gainers and losers. Our biggest gainers this morning are led by Catalent on the news of Danaher's interest in them. Trading under the ticker CTLT, they're currently up just shy of 27%. They're followed by Life Storage under LSI, up over 10%, and C3AI under the ticker AI, up 9.5%. And our biggest losers this morning are led by iQIYI. They're cooling off from gains last week after some successful fundraising. Trading under the ticker IQ, their stock is down 6.5%. They're followed by Lufax Holding under LU, down just 6%, and Newmont Mining under NEM, down 5.6%. So that is going to be everything for Monday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, don't forget to hit that thumbs up button and say good morning in the comments. I always love hearing from you guys. Thank you so much for watching. Have a great day, and I'll see you back here next time.